Hello guys, welcome back to a new video, and before we even start I just want to make a big announcement. So today from 5 to 6 p.m. we have the webinar running, the week wrap up, and I think this is one of the most important webinars for this month. Well, last week of course, next week of course, we're going to have a webinar on Tuesday that's going to be very important leading to the FOMC, and on Thursday covering the FOMC rates decision. But please be in mind that today we have the ECB and yesterday we had the US CPI. So I will be talking about how this will affect the market on the long trajectory of the year, right? So in the next 4 months, pretty much 3 months and a half. But be in mind, easy, no costs at all for you to register. So just go to the description of the link, clicking the registration link that will link you, that will guide you through the ACY website. Put your email there and wait for the link to come to your email so you can join us on the Zoom today in this afternoon. Now, as I've said, we did had the release of US CPI that was much awaited, from majority of the market. It was much awaited, and the CME Fed Watch 2 did change quite a bit from a perspective of more likely to cut 50 to now 80 to 90% precified a 25 basis point. So what happened with the US CPI moving the CME Fed Watch 2 is that the market was expecting the lower inflation. And this is why one of the reasons I was expecting a lower inflation to come, because majority of the market was in a moment specifying a 50 basis points cut and not a 25. So therefore the market was awaiting for a precipitation, for a lower than expected CPI, as they were already expecting a higher cut of 50 basis point. Now, that of course won't happen. We will have a 25 basis points cut from the Fed in next week, because we did add a higher than expected CPI. So expected core CPI was at 0.2% month over month. It came up at 0.3%. So yes, this was the whole trigger of a stronger US dollar, because it's the core CPI. If it was the normal CPI, that wouldn't much have effect into it market, right, on a month over month. But besides the core CPI month over month, all the others came in as expected. Core CPI year over year came in as expected at 3.2. CPI year over year came in as expected 2.5, and CPI month over month came in expected at 0.2. So pretty much all of them came in exactly the same as was previously, except for the CPI year over year. But as well, the core CPI month over month, that came in at 0.3% from 0.2 previously, and expected 0.2. So they were expecting no changes, and it came out 0.1% higher than expected. So now moving on to today, I'm going to be discussing what are the impacts on the market on this afternoon webinar. So not going to take much time on this video, but we're going to jump right through the ECB on today 10:15 p.m. Australia time. So ECB has another 25 basis points cut probably coming. Some of the economic calendars are talking about a 60 basis points cut. I'm 90% sure, 99% sure, if I could say that this is a mistake and they are specifying something wrong, okay? So very strange the market to be specifying a 60 basis point cut from the ECB, because when all the bigger analysts, bigger banks are talking about 25 basis points. So I do believe that is a mistake in some of the economic calendars. In all sides, Finlogics maintain the same 25 basis points, and this is what we're expecting as well. Now, I expecting 25 and Peter expecting 25. Peter is other analyst here at ACY. Now, this will happen tonight at 10:15 p.m. and the most important thing is the CPI for Europe, the inflation for Europe have been declining, the normal CPI, but the core CPI is still at 2.8%. So the normal CPI, just CPI, is 2.2%, so that's very good. But now the core CPI is at 2.8%. So as the normal CPI is declining very well, the core CPI is very sticky at this moment stage. So they will have to cut another 25 basis points. They won't be able to cut maybe 60 basis points as some of the economic calendars are predicting. My honest opinion on that is they won't mind much of the cut because the cut is already sort of expected by the market. What will matters the most is how Lagarde will get into the speech. If she's going to be much more dovish that yes, we have to maintain it cutting the rates, or maybe more neutral, or maybe more data dependent. My take, data dependent. This will lead to a stronger euro, okay? Because we still have high inflation and people are believing that inflation can continue sticky on Europe. Now, if you know how the trade ideas and how can we trade these, I'll wait for you today, this afternoon, 5 to 6 p.m. on the webinar. Please guys, give us a thumbs up on this video, subscribe to the channel, send this content to your friend and invite your friends over to the webinar. If you're not yet on the Telegram, please do it so by clicking in the description and the Telegram link. You can join us there. I send you some good content as well. Been very busy in the last couple of weeks, so not much content happening on the Telegram, but I will try to keep it up again with the Telegram. Guys, thank you so much. I see you in this afternoon, or I see you tomorrow in the next video. Bye bye all. See you all.